Hello, welcome back to this week's market update. Today is Monday, March 18th, 2024. We are coming into a Fed meeting week, and last week was full of some pretty important economic data, so we'll jump right in. As I was just saying, last week was quite important in terms of economic data. So we got the CPI print, the PPI print, and a few other data points. Ultimately, though, markets weren't too shocked by this data, although we did end lower on the week. We saw the Dow Jones at just about flat, the S&P 500 down about 0.1%, the Nasdaq Composite down 0.7%, and the Barclays Agg down 1.2% on the week as expectations for higher rates for longer drove yields up and bond prices down. Taking a look at this month's CPI print here, you can see we saw headline inflation, headline CPI tick up slightly to 3.2% in the month of February, while on the other hand, core CPI, which excludes food and energy prices, came down slightly to 3.8% in February. On a monthly basis, both headline and core CPI rose 0.4%, so it is quite a strong number there. And overall, this was a higher inflation reading than what economists expected. Although we didn't see the S&P 500 too alarmed by it, actually it was up more than 1% on Tuesday, March 12th, following the news. So we have seen inflation significantly moderate over time, especially since this peak in 2022, although we are not quite near that 2% level that the Fed is really shooting for. So we'll take a look at kind of the underlying data here in the next slide. Digging a little bit deeper into our February CPI, here you can see the headline 3.2%, but what was behind that on a monthly and an annual basis. So the increase in February alone, you can see up 4.4% in the month, and that was largely driven by this 2.3% increase in energy prices, as well as a 0.4% increase in shelter prices, which shelter is the largest category in the CPI. So obviously, when shelter prices are up 0.4%, that gives you a lot more leadway to end inflation up 0.4% or closer to it in that range, since it accounts for such a large portion of the equation there. Also notable in the CPI print, we saw food prices actually flat on a month-over-month basis, only up 2.2% from a year ago, so that's great news for the grocery store. Then we also saw, in terms of decreases, medical care, commodities, as well as new vehicles down ever so slightly, down 0.1% on a month-over-month basis. Another few unique things in the CPI print, we saw apparel up 0.6%. So kind of you can see those holiday sales cooled off and prices went back up in February. We also saw used cars tick up slightly, as well as other utilities like gas service up 2.3% in the winter month there. So overall, it is an okay CPI print, definitely probably a little bit higher than what the Fed is hoping for, but some interesting insights we can glean from looking at the underlying data. Moving along through our week, we also got the February PPI, the Producer Price Index, alongside the CPI. So we saw 1.6% headline inflation, which is quite a bit of an increase from January's numbers, also higher than expectations. Then on the core PPI, which excludes food, energy, and trade, that came in at 2.8% from a year ago, and that was also a slight uptick from January's annual numbers there. One really interesting trend in this month's data, which maybe not a trend, maybe it's just a 1 month kind of road bump in the data, but we saw goods inflation run a lot hotter than services inflation. So here you can see goods increased 1.2% in just the month of February alone, while on the other hand, services increased only 0.3% month over month there. So that ultimately led to the headline PPI rising 0.6%. But just a very interesting dynamic. Previously in the pandemic and even coming out of that over the last 2-3 years or so, we saw the service side of the economy a lot hotter inflation and that sort of thing. So really interesting here, a lot hotter goods inflation than services this month, and the data came in hotter than expected overall. Also last week, we got the retail sales figures for the month of February coming in at just over 700 billion, which was an increase of 0.6% from the month prior, although this was a bit lower than the 1% increase that was expected. And then when we look at the categories, the broader categories, you can see auto was the strongest, so great month for car sales and growth across all other categories as well. When we look at the subcategories, the two strongest notable increases were online shopping, which was up 6.4% from a year ago, as well as food service and drinking establishments, which was up 6.3% from February of 2023. So overall, pretty neutral sales report. We had a good month of growth. However, it was below expectations. So overall, pretty neutral. And looking at our final data point of the week, we also got consumer sentiment from the University of Michigan, and that showed a slight decline of 0.5% in the month of March. However, it was up 23.4% from a year ago. So you can see we have been on quite an upward movement since this bottoming out in 2022, and how consumers have increasingly felt more positive, although we did see a slight pullback this month. Within the survey, we saw a lot of respondents note that the elections were a significant risk they felt to the economy and to their future business condition, expectations, and on top of that, they also thought that the 1-year inflation rate moving forward would be about 3%, which was about on pace with the actual data that we've been seeing and with the previous month's expectations. So overall, I would say, again, a pretty neutral month of consumer sentiment, a slight pullback, but it is significantly up from a year ago. So thank you for tuning in to our market update this week, and we look forward to seeing you next week with some great updates from the March Fed meeting. The information you have heard is the view of Synergy Asset Management as of the date of publication. These views and opinions are subject to change without notice. Investors should not act on any recommendation, express or implied, or information in this material without obtaining specific advice from their financial advisors and should not rely on information herein as the primary basis for their investment decisions. Information contained herein is based on data obtained from publicly recognized sources and is believed to be reliable and is not expected to be updated after initial publication. This information has not been independently verified, and Synergy makes no representations or warranties as to its accuracy. The material has been prepared solely for informational, educational, and market commentary purposes and is not a solicitation of advisory services or an offer to buy or sell any security or to participate in any trading strategy.